Welcome to another S&P 500 analysis. Today is April 2nd, 2022. The market basically have moved up and down throughout the week, but end of the week, it basically finished almost unchanged on the S&P 500. And that's why I call this video, the title of this video, sitting at a tipping point, because it is sitting at a level that it is getting ready to either tip over or explode upward to the all-time high. So either the market is going to come down, test the February low, or it's going to move up to test the all-time high. So in this video, we're going to take a look at the market sentiment, the market internal, and also the price action of the individual indexes, the S&P 500, Dow Jones Industrial, the Nasdaq 100, the Russell 2000, and other indexes. In addition to that, we're also going to take a look at the gold, silver, crude oil market, the bond, the dollar, and also the couple of FANG stock that we talked about last week, Apple and Tesla. And then we're also going to follow up on the home builder stock that we also talked about from last week's video and see what they are telling us. And should we be on the lookout for a tipping over move or for explosive move to the upside in the coming weeks? So stay tuned. Okay, before I begin, I need you to take a moment and click the thumbs up to help me promote this video on YouTube. Now let's start looking at this weekly chart of the S&P 500. As you can see, the range for last week is 129.73 point and only gained 2.8 point or 0.06%. So that's basically unchanged, right, for an index that's sitting at 4,500 level. Okay, and now the price action, it is continuing the one-time framing up on a weekly basis and also closing above the 10-week and also the 40-week moving average. But it is still underneath this price channel, this multi-year price channel. Okay? Now, the 10-week moving average is under the 40-week moving average, although the 10-week is starting to turn up. And it did print a higher high here compared to this high. Remember, we were talking about this price pattern here. So you see this high. So now we're going to see what it come back down and print a higher low. Then we're basically looking at a little bit of an uptrend here. So we're going to take a look at the price action of the indexes and also the market internal and the sentiment and see is the market getting ready to come down and put in a lower low or a higher low, because we still have to check out this low here. So let's go and take a look at the sentiment and the market internal. Now, for those that are unfamiliar with the market sentiment and the market internal that I am about to review, then go watch my video on 7 key market indicators, where I explain what each one of these indicators represent. I have posted a link in the description below. And if you are interested in monitoring what the market is telling you and to get an unbiased view on the market, then click to subscribe to this channel. Now let's take a look at this sentiment chart here. We notice the VIX been hovering around this 20 level throughout the week, but though didn't quite stay above that 20. It is down near this 19, just right below the 20, except on Thursday actually peaked above the 20 just by a tap, sitting at 20.56. But on Friday, it closed at 19.63. Now in the put call ratio, it was actually down at a little bit more of a risk on early in the week, but as the week progresses, we see that it come up and try to get up to this 0.75. It closed Friday at 0.739, so it's getting a little bit hedgy, but not necessarily so yet that much. If it get above this 0.75, then we could see the market participant are getting a little bit more hedge on instead of risk on, right? Right now, it's still a little bit risk on. And looking at the up-down volume ratio on Friday, the S&P 500 was actually up 0.34% of 15 point, and we did see a positive up-down volume ratio of 2.5 to 1 in favor of the up volume. And the advanced decline, actually there were 1,001 more advancing issue than declining issue. But looking on Thursday, on Thursday there was 4.2 to 1 more negative down volume than up volume. And also we are seeing more declining issue than advancing issue. The decliner outnumbered the advancer by 689. Now on Tuesday, we actually saw quite a strong day on Tuesday. It was almost 4 to 1 in favor of up volume, and there were 2,110 more advancing issue than declining issue. So that was a quite strong Tuesday. So we're kind of getting a little bit of a mixed bag last week. And that's why we saw that throughout the fluctuation within the week, it ended the week almost unchanged on the S&P 500. And looking at the new 52-week high versus new 52-week low, we did see the new high outnumber the new low last week for the last 4 days of the trading week. We see that the new 52-week high actually creeping up, although the new 52-week low, the number of new 52-week lows still staying down below that 100 level. So we are seeing a little bit more number of stock hitting new high than new low. Now, the cumulative advanced decline line in the New York Stock Exchange didn't do too much. It's pretty much flat, while the S&P 500 came down a little bit. But I'm still waiting for this negative divergence to get resolved. So when that occurs, like I said from the previous video, we most likely will see the S&P 500 come down and test that February low. Now, let's take a look at the Nasdaq. The Nasdaq actually closed up 0.15% on Friday. But notice the up-down volume ratio was actually negative. It was 1.1 in favor of the down volume versus the up volume. And also the advanced decline is positive, but not that positive. It was only 824 more advancing issue than declining issue. Now on Tuesday, it was quite strong. It was over 2,300 more advancing issue than declining issue. And the up-down volume ratio was almost 5-1 in favor of the up volume. But throughout the remainder of the week, it was a little bit of a mixed bag, just like the S&P 500. So again, we are seeing almost just not that much of a change in terms of the week-to-week basis, but we did see a lot of movement throughout the week. And looking at the new high, new low, the new 52-week low is still outnumbered the new 52-week high in the Nasdaq market, except on Tuesday, it actually got a little bit positive, and the new high actually outnumbered the new low by 17 issue. Other than that, it's still pretty much negative. And not much happening on the advanced decline line in the Nasdaq market. It's pretty much moving with the Nasdaq 100. So as the Nasdaq 100 moved down, the advanced decline also moved down. Likewise, when it tried to move up a little bit, it also moved up. There's no negative divergence or positive divergence outstanding for us to wait for resolution, such as the S&P 500 that we are waiting for a negative divergence to get resolved. So overall, based on the sentiment and the internal, the market seems to be on a waiting game, right? It's just sitting there waiting for something to happen. That's why this video is titled, sitting at a tipping point. Right? It's just right at a tipping point. It's getting ready to do something, either, get an explosive on the upside or, tip down on the downside there and come down and test the February low or shoot up and try to target the all-time high. So it is sitting at a tipping point, and when we take a look at the price action of the indexes, we'll see a little bit more detail on what I mean by that tipping point. Now let's take a look at the S&P 500 daily chart here and take a look at the price action. Remember, we were talking about this 618 level coming up to the 618 level, and also essentially there is a balance area here, and we're looking at a look above and fail. So right now it came up, broke about the 618 and try to move up away from it for this pivot high at 4,750. And as you can see, it never even got close to it. Right now, it came back into this balance area here. So now we're essentially looking at this move of look above and fail. Remember, I talked about that in one of the video that I put out about volume profile trading strategy. And if you're unfamiliar with that and have not watched that video, I put a link to that video in the description below. So you might want to go and check that out and see some of the setup strategy using volume profile. And essentially, look above and fail. And what we expect right now, if it continue to play out on this setup, then we essentially look for the price to move back to the other side of the balance area, which is on the low side here. And we're essentially looking at somewhere around 4,300. Now, of course, I also have the Fibonacci retracement here. So we're essentially watching this level. The next level on the downside is 4466.64, somewhere that's a 50% retracement. And here's the 38.2. somewhere around 43.8357. Okay, so those are a level to keep an eye on. And looking at the Nasdaq 100, the daily chart here, as you can see, it also came up to this 618 here and bump up against that and then start pulling back. And now it's sitting somewhere around this 50% retracement at 14,819. So basically watching to see what continue to move down. And right now also I set up a Fibonacci retracement using this swing. If it continue to move down, then we'd be looking at this retracement zone here to see would it get a bounce back up. So we're essentially looking for a move down to this 14,417 or 14,418 area and also 14,156. So the key point here to watch is this 382 and this 382. So somewhere around 14,400 area. So that's a level to keep an eye on for the coming week on the downside for the Nasdaq 100. Now, if it continue to push up, then we essentially are looking for this thing to continue to move up toward this level here at 16,000. Okay, but right now we're essentially looking for some sort of a pullback because this is basically a tipping point right here. Either it's going to move up or it's going to come down, continue to work itself down and possibly get down to this 14,400 and even come down to the 618, somewhere around 13,895. And for the Russell 2000, and we're basically watching to see would it be able to get above this 2134 and get back into this balance area. As you can see, it bumped up against it and then immediately pull back. So right now it's coming back inside of this consolidation area, this balance area, and we're essentially saying this could be a little bit of a flag. Then we have a major move here, and that will project it down to somewhere around 1748. If it's play out, let's say if it's, this thing come back down and break below this 1935 area, then we essentially are looking for a major move down to this 1748 area. And that would be in confluence with this 1725, which is this pivot high. Now, looking at the Dow Jones Transportation, it did not have a good Friday. All right, you see a big sell-off on that, and that's after the non-farm payroll came out. And the thing was that it indicated that the trucking or the transportation sector actually lost job. So that's the reason why the transportation would have got hit on Friday. And also the there's could be something, a lot of the talking head, including the Fed, thinking about this inflationary pressures due to the supply chain problem, right? Now, if they are laying off people in the trucking company or in the transportation company that moving supply and good around, then if they don't have enough job to keep everybody busy, that they have to lay off people, that means there is no supply chain problem that is waiting to get resolved. So we gotta have to think a little bit deeper to see exactly what is really pushing this inflation problem. It's not a temporary supply chain thing. Like I said, there's that wage inflation, okay, that is permanent. And the only way to eliminate that or reduce that is basically we go into a recession. I hate to say that, but that's the reality. So anyway, we're basically looking at the transportation and see would it continue to come down. And we're basically looking at this possibility to come down and test this low at 14,133. This thing continue to move downward. And here we are looking at the Dow Jones Industrial. The Dow Jones Industrial also pulled back from the 618 after it moved above the 618 and tried to pull away, and which also unsuccessful. And now it's coming back down to this 50% retracement. So we're essentially watching this to see would it be able to actually get out of this retracement zone, either on the upside or on the downside. But right now it's looked like more on the downside to come down to this 34,000 area. So be keeping an eye on this level here to see how it will react when it get down to this point here. Now, there is no Dow theory in play right here, right now, okay, at these levels. So don't talk about Dow theory yet. At least I won't be talking about Dow theory. When there's time, there's a Dow theory in play, I will mention it. And here, looking at the New York Stock Exchange Composite Index here, we see that it tried to get back out of this balance area right? And remember, we were saying that if we could stay above that, then we're essentially looking at a move up to this pivot high. Then we be looking at this all-time high back in play. But right now, is this back inside of this consolidation area, this balance area. So once again, we're basically looking at a little bit of that setup look above and fail, essentially coming back in. So now we are looking at the possibility that it could retrace back down to this 16,000 level. Now let's take a look at the 10-year yield. As you can see, the 10-year yield actually pulled back last week from the previous week high, and it sit below this 2.4%. It's saying it closed on Friday at 2.377. But still, it is still up here at an elevated level here, and we're still targeting this 2.5%. Remember, we'll talk about this this extension, and also this major move. And that's this major move is from this cup and handle here. There's 100% major move. And then this major move here is from this cup and handle. And we're basically just talking about 618. Now, if it move up to the 80%, then it will be 2.75% yield on the 10-year. And if it go to 100% on this huge cup and handle, then it will be at 3%. So those are some of the levels to keep an eye on, and that's basically what we are watching right now. Remember from the last video, I mentioned that the Fed is timing or kind of conditioning the market to be prepared for a 50 basis point increase or even higher. And I'm saying that even from the previous video, the video before that, I said, don't be surprised that we're going to see the Fed to announce a rate hike in between two FOMC meetings. Now let's take a look at the US dollar. As you can see, the US dollar came down at the early part of the week. And then the last couple of days of the week, it came back up. So right now, we're still looking at this 98.8 to 101, this zone here. So we're basically looking for the dollar to come back into the zone and work itself up toward this 101 level. Although it's been chopping around between this 97.79 and 98.80 in the last month. Still waiting for the dollar to come up, and I believe that the dollar still will try to make a move in the upward direction. And for the crude oil market is still bouncing around at this 100 level here. So wouldn't be surprised to see it come down and possibly test this 93. Essentially, retrace back down to this 50% retracement and see if we get another bounce back up. And we're still basically looking for this prior high to get taken out somewhere around that $130 level. Now let's take a look at the silver market. The silver market, it came down to the 618 and it bounces back up. Although it did try to stay above this 38.2. So right now, essentially, it's being trapped inside of this retracement zone. So we're going to be watching silver to see what it gets itself out of this retracement zone and work toward this 2667 and get back to this pivot high here at 2750 area, and then make us move up to this 2950. That's basically the target level that I'm watching right now on silver. And likewise for the gold market, the gold is also being bouncing around inside of this retracement zone, and once again got a nice bounce off of the 618, and we're still basically watching to see what it get back above this 38.2. That's basically 1965 area. If we get above that point, then we'd be looking for it to come back up to make this test at this 2078.80, and then possibly get up to this high here at $2,113.20. Although we could see it if it breaks below the 618, then keep an eye on this 78.6, somewhere around this 1850 level here. So it's also in confluence with this zone here that I have marked off. This is basically a high volume zone here. Now let's take a look at the ETF for the S&P 500, this SPY. Now this is the 4-hour chart here. So again, you see that it came above this 618 level and move above this high volume zone here. You see that once it moved up there, could not hold it and then pull back. And remember, we're basically looking at, again, remember the one of the possible moves that we're looking at is to look above and fail, coming back into the value area. And here's the composite, this composite volume profile. the composite point of control is somewhere near this 450. So right now it is bouncing between this 450 and 452. So next week we'll be keeping an eye on the SPY to see will it continue to come down and take out these level here. Essentially retrace this retracement zone break below the 38.2, and that would be below the 437.67, and bring it back down to this value area low here. Okay, so we're basically looking at this 423.45. This is the value area low for the composite. So keep an eye on this move coming back. That's why the tipping point that we are talking about is essentially this 618. And right now, unless it could move back up above this 618 and stay above it and take out this 457.62 and also this pivot high here, essentially you're looking for this thing to make a move up here to this 474 area and above, then we will be able to keep an eye on the all-time high play once again. But right now, we're essentially looking for this retracement down to this value area low at 423.45. So essentially 423.50 area. And likewise on the QQQ, the ETF for the Nasdaq 100, as you can see that it bumped up against this 618, and essentially also the value area high here for this composite volume profile at 472. And now it is coming back in and tagging the 50% retracement at 361. So once again, we essentially are looking at this retracement here, back to the other end of the balance area, which would be down here somewhere around this 335. So this value area low here on this composite volume profile, currently sitting at 334.36. So there is this point of control here at 347. So watch for that, get a little bit of a bounce, chop around, and then move down to this 334. Unless you could break out and move back above this 618 and get back above this 371.30, then we'd be keeping an eye out for this 390. And if we could get above the 390, then the all-time high will be back in play. Basically, I'm looking for it to tip down on the downside here and make its move back to retest this point of control and at least this value area low. And the IWM, the ETF for the Russell 2000, as you see, has also almost got up to the 618, 212.15, this area here, before it pushes back down. So right now on Friday, it closed at this level near the 50% retracement. So once again, we're essentially looking at this retracement zone. And here's this value area for this composite. So once again, we are seeing this look above and fail coming back in. So unless it could push back up and get above this 61.8, above this 212 and pushes through this 215, then we be looking for this continuation to move down. And watch this 199 here, this composite point of control here, bounce around and then push down to this 190, 195 area, the other side of the value area, this value area low, the composite value area low. So as you can see, a lot of the indexes and also the ETF is basically sitting near this 61.8, what I call the tipping point. Remember last week was basically saying it is at a critical juncture. It made them move up, try to get away from this point, and they have to come back down because unable to break out from it. So right now, we're basically looking for the possibility of tipping over. Now, let's go and take a look at a couple of those FANG stock, Apple and Tesla, and see what they are telling us. Are they supporting the possible move of this SP500 and the Nasdaq on the downside, or are they really still continue to push those the indexes to the upside? Then we're also going to look at the those home builder, which is interest sensitive sector right now, and see how they are doing. Okay, let's take a look at Apple here. Once again, using TradingView, the fixed range volume profile to set up the composite, and so we could take a look at the various high volume node and low volume node for potential support and resistance. And looking at Apple, remember last week we were talking about Apple. If it could, break above this value area here, this composite, right, then we're essentially looking for the possibility of see would it get up above this 180 and then move up to the all-time high. And that would also help propel the S&P 500 toward the all-time high move as well. But once again, you see that just like the index, we see that the Apple pulled back in to this value area. So this again set up a look above and fail. So right now we're essentially looking to see that could it get below this composite point of control here, somewhere around this 172. So right now it got a nice bounce off of that on Friday. Next week, will price move dip below this point of control and then start coming back down to this other side of this value area. And that is in confluence with this 618 at 161.37 on this Fibonacci retracement here. Okay, so keep an eye on this 161 area for Apple in the coming week, because if it pulls down, then that will support the S&P 500 and also the Nasdaq of tipping over to come down to test possibly the February low. And here looking at Tesla, you see the Tesla also move up, and it pushed up to this 78.6 here, and then up at this near the 1100 mark and start pulling back. Right now, it got as high as 1479 last week. So right now we're essentially looking for a possible pullback down to this 1037.94 here, this little bit of a high volume area here, and to see what it come down and basically retrace back down to the zone here, right? This Fibonacci retracement 618 and the 50%. So that 50% is 954, and that would get it back inside of this value area. And if it does come into this value area, then basically I'm looking for this thing to come back down and retest this 956 area. So right now, that's basically what I'm looking at Tesla. And if it does come back in or even come down to this area here, 618 between 1013, 1014 to 954 area, that will help pull the Nasdaq 100 and the S&P 500 to a lower level, right, and get closer to the February low. So once again, essentially you're looking at Tesla pullback and also Apple pullback, and that will tip the S&P 500 and the Nasdaq 100 on the downside for next week. Now let's take a look at the home builders, starting off with Nanal. And as you can see, remember we'll talk about this little bit consolidation area, possible flag here. And we're basically treating this as a bear flag if it breaks down. And right now it seems like it's trying to break down here. And if it does, then we have a 100% major move down here at 61.72 and an 80% major move at 67.81. And this 80% is also in confluence with this low volume node here. So we'll be watching the home builder to continue to move downward. And right now, Nanal seems to be breaking down from this flag here. So if we get a continuation move down, and we're essentially looking at these two levels here. Toll Brothers also start moving down. Right now, it got below this high volume node here at 49.21. So the next high volume node that we'll be watching will be somewhere around this 44.84, and come down to this low volume node at 40.74. So essentially looking at the chop and then see what it get a bounce off of here at 40.74. If it doesn't, then we continue to watch these high volume node to get tagged below at this 32.54, and then a low volume node here at 28.91. Now there is a composite point of control down here somewhere around the 22 area, so keep an eye on that. But we'll see. I mean, that's a big move to go down in 1 week to from 49, 47 down to 22. But anything is possible. But the first thing first is watch this 40.74. This low volume node, and maybe. Maybe at 28.91. I'm not sure it will get there, but keep an eye on 40.74 in the coming week. And here, looking at DR Horton, you can see that actually it came down. Right now, we're basically watching for this 70.14 here, this high volume node somewhere around this 70.14. So be keeping an eye on this possible move and come down to this 60.66, this low volume zone here. And finally, looking at Pulte Home, still looking at the possibility of moving down here to this 39.94, 37.78 to this zone here. So basically, that's what I'm looking at right now. So as you can see, a lot of the indexes and also a lot of the stock that we looked at and also the other market is sitting at a tipping point at a level that it could tip over. Right now, the markets appear to ignore the fact that we are in an inflationary environment and the Fed has to do something to control that before it really runs away and lose total control. Because right now, they're already losing control of the inflation battle. And if they lose total control, then all hell is going to break loose. And also, in addition to that, it is a midterm election year, and the Democrat will put a lot of pressure on the Fed to do something or to indicate that they are trying to do something to control inflation. And right now, the market appears that what inflation, what interest rate hike, right? It just continue to move up like there is nothing to worry about. Well, that's the time that we need to be worried about. So be careful. We are at the tipping point. A lot of the surprise is still waiting to pop its head up and trap a lot of the dip buyers. Because I think right now we have a lot of people thinking that, yeah, the market only goes up. Remember when the S&P was coming down here, a lot of those dip buyers pretty quiet. And then once we start getting a little bounce here, then they pop their head up again and say, see, to the moon, the markets only go up. The Fed is always come to the rescue, right? So once again, be careful. So anybody that start investing after 2009, you really haven't seen a full market cycle yet. So just sit tight and don't be arrogant because the market will always humble us. Thank you for watching and be sure to smash that thumbs up. Help me promote and share this video. Good luck and stay safe.